Let's start off with your dividend per share, maintained at 50 cents. Tell us a little bit more about this stance and whether you plan to change tactic going forward.
Afternoon, Eleni. Yes, in terms of the dividends, we announced some time ago that we're actually planning and working towards a 3 cover of our dividend, and that was announced earlier. The shareholders should be aware of that. And for that reason, we maintained our 50 cents final dividend in line with the total dividend of last year, and that is the reason for that.
With regards to your Western Cape operations, Cape Gate Medi-Clinic, it's performing quite well. In terms of performance going forward and where you see the most optimism feeding through within your local space, what section are you most bullish about at this point?
Yeah, we are very pleased with the performance of Cape Gate. Take note that for this year it was 12 months of reported revenue and profit, obviously, and the hospital exceeded our expectations. Further growth, we invest quite heavily, as you would note in some of our notes, in our existing capacity, increasing our existing capacity, and we believe the GEMS growth in South Africa, where we are very well positioned with our footprint of hospitals serving that community, is upside potential for us going forward.
I mean, it's fascinating when you're talking about increasing capacity. We see in Nelspruit Medi-Clinic 66 additional beds. We're seeing Stellenbosch increasing as well, Kimberley Kloof Medi-Clinic as well. So you really have been on increasing capacity quite extensively and aggressively. Is this going to be the name of the game? Because we are seeing debt at around 22.24 billion rand at this point, and we're seeing cash generated at around 4.2 billion rand. So you're sitting in a relatively strong position at this point.
Yes, our strategy is to invest in capacity at existing hospitals. A winning recipe is if you have a busy hospital sought after by the patients and the doctors community, if you add capacity there, you leverage on your existing overheads, giving you very good returns. We've been doing that for some time, and we will keep on doing that going forward. That does not exclude adding new hospitals. We also have a license for a new hospital in the new year that will start in the Centurion area in Johannesburg. But we've had very good returns in enlarging capacity at existing hospitals.
With regards to a few unknowns going forward, we know that regulatory issues could create some uncertainties. Of course, we're talking about the NHI quite extensively in the country. And what about amendments to the Swiss Health Insurance Act? Is that going to be an issue going forward? How do you plan to cope with these changes?
I think the key issue is there's uncertainty. There's a very specific focus basically on 3 fronts. The one is that the Swiss regulatory environment is changing to specify the specific lists of hospitals that will cater for the basic insurance patients. Secondly, it is regulating the financing environment in terms of what contribution to be made by the cantons and what by the insurance companies. And then thirdly, moving towards a fixed fee environment, or a DRG, diagnostic related groups. So far, very little known, but we are not too worried about it. Our management teams on the ground are very involved, influencing regulatory reform. And so far, we had some positive movements, but unfortunately, we cannot give you a final answer on that.
With regards to margins going forward, we know that your revenue has basically been split by the likes of South Africa, Switzerland, essentially. What about margins going forward when it comes to your Swiss operations? Are you concerned that we could see further squeezing there?
Eleni, as you've remarked, we had very good actually returns in terms of our core headline earnings per share. You referred to flat performance, but if we take the once-offs, we did extremely well in terms of our core headline earnings per share that grew with 20%. In terms of margins, both South Africa and Switzerland maintained the margins, and in Dubai we saw a significant increase in the margins coming from a low base with a new capacity coming to capacity at this stage, and the margins there increased dramatically.